So everybody can see my screen now. So let's get started. Let's take it again. Now, futures trading. This is futures trading. Yeah. Okay, awesome. So again, if you can see my screen, just type 1 in the comment section. Type 1 in the comment section if you can see my screen. Oh, okay, we can see it now. Good. We can see it now. So this is trading view. This is let me make sure that the ratio is fine. Okay, now it can be wide as it can be. And all right, so this is SUI US. I'm doing a challenge on SUI, and this is a trade I'm taking. So this is what I was showing you guys. This is what I was saying earlier. This is a trade I took. I took yesterday's trade here, but I deleted the stuff, so you can't see it now. And if you look at the market, it's been really, really slow. It's nothing was really going on. And I like to trade, look for setup from like 6. If I see setup by 9, I take. If I see, but once it's 3 or 4, I just leave it and go and do another thing. But if I see a trade, like if I just see a trade and I take the trade and it goes my way, I just leave the market. Okay. I took a trade somewhere here, but I just can't. Maybe it's this setup I took. And guys, all I just target a risk reward ratio of 2R. Then do it every day. But what people don't understand is what is called compounding. If you can compound your trades over time, you don't have to be start chasing a 10R or 3R or 10X. It's basically like that. You don't have to chase that. If you can compound your trade daily, it makes things quite easy. So let's look at today. Don't be so I'm going to zoom in. So this is actually 5. Let me take it to 15 minutes. So this is today. So what I usually do is I basically trade trend lines, right? I try to take trend lines, then I wait for what happens at my trend lines. If I see a good setup at my trend line, so it's more like if I see a trend line, I just draw it and I wait for reaction there. I wait for the trade to come there, or I trade to that part to the trend line. And if the trade comes to the trend line, and I look for what the reaction that happens there. Another thing I trade with is Fibonacci retracement. But what I want to show you guys today is something else. So let's look at this. This trend line was drawn. I think I drew this on the 1 hour time frame. So if you see this, it's connecting this and all the way down. So I'm connecting only. Oh yeah, there's something in trading view I learned that can help with the pointing. I just saw that today. Let me just use it. So this, yeah, so this helps with the pointing. So if on the 1 hour time frame, I want to show you guys how I drew this line. This particular trend line. So I'm looking at this, I'm connecting this to this. Mind you, I connected this, but the body to this, and I extended it down, connected this to this, extended it down. I'm just looking for what happens when the chart reacts. It's as simple as that. What happens, I confirm with this. This is called the stochastic RSI, or I confirm using what we call the high Kinashi candlestick pattern. But right now, I'm going back to the the Japanese candlestick pattern. Now, I don't know, my internet seems slow. Let me just wait for this to load. I don't know if I should switch to another network. My internet is quite slow. Let me test the other network I have with my phone. If it's good, then I'll go ahead and switch to it. So we don't have. So let me see how that works. Okay, it seems good. So let me switch to other Wi-Fi. See, okay, the switch is done. Can I still be heard? If you can still hear me, just type one in the comment section. If you can hear me, okay, if you can hear me, type two in the comment section. Type two in the comment section. Type two in the comment section if I can be heard. I want to know if this network is better. Okay, I'm waiting. I'm waiting. It seems there's a lag from when I speak to when you guys type, but I just want to know that I can be heard. I'm still waiting. Type two in the comment section if you can hear me. Okay, at this point, I don't know if I can be heard. I don't know if it can be heard at this time because I'm not seeing anything. Oh, okay, okay, okay. I thought I could not be heard anymore. All right, thank you. All right, so let's go back. Let's go back. How come I'm not seeing the comments anymore? Okay, awesome. Now, I was here talking about here. So this is, if I let me switch this to line chart. I like line chart sometimes. So I'm connecting this. Line chart shows us the body, right? The closing prices. So you see the first line, I connected this to this and I extended it. So if this chart comes to here, interact with this line, I'll go and look at it and see if there's see if there's a trade for me. That is as simple as that. But if you look at this one, you might wonder, where did I connect this one? I connect both the body and the wick of the candle. So you can see this one. What I connected is the wick here and here. All right, so my mic is off again. Okay, so if there's an interaction here, I look for trade setup there. So it's as simple as that. So I do this on the 1 hour time frame. But where I take my trade is on the 15 minutes time frame. 15 minutes, 5 minutes, sometimes even 3 minutes. Yesterday I took trade on 15, on the 3 minutes time frame, but I start looking for trade entries at the 15 minutes time frame. Now the first trade I took here is actually this particular one here. It's not a big trade, but you can, if you can see, let me make it bigger. It's a 2R risk reward ratio. But you may wonder, why did I enter this trade? I went lower to the 3 minutes time frame. This is basically scalping. So if you look at, no, 5 minutes rather. So 5 minutes time frame. It was 3 minutes. So this trade I entered with the high Kinachi. So high Kinachi, if I go back to the other regular candle, this showed me a continuation pattern. And when I saw the high Kinachi change, I entered here, stop loss at the bottom, and take profit at the top here. And that is what formed this particular trade. But this is not the trade I want to show you guys today. The trade I want to show you is this particular one. Sorry, my internet is so slow that it takes time for my chart to switch from one place to another, and so come on. Finally. So let's look at this. This is what I want to teach you guys today. The divergences. This is called a stochastic oscillator. And let me remove this. Let's look at what happened here. But let me remove this one as well. Let's look at what happened here and here. Why this here is a good entry. Why this is a good entry. This is a good entry, and I'll show you why. The reason is because there is divergence. Now, if you ask me why did I draw this thing here, this particular stuff, because I was expecting price to come down to this level. And what made me draw this is I use the Fibonacci retracement. So if I bring it here, my golden ratio is this yellow line that says 6.2. And so what I did was, and I'll draw a line there, I removed it. This is this line that I drew here. And I still draw this gap here is what I filled with this rectangle shade. So I was expecting price to come down here before going up, right? I don't know what it was going to do before it comes down, but I was expecting it to come down. And you can see from 130, it started coming down and it hit it. And from there, it moved up. And this is what informed this particular next trade. But how do you know it is time for this to come up? It's because of this line. If you look at this top, let me switch to line chart so maybe you get a sense of, no, it doesn't make sense in line chart. So this is a top, a swing point here. I don't know if you have seen it. Let me make it bigger. This is a swing point here. This is another swing point here. But if you look at it, here is lower than here. So this point is higher. So the chart is going up this way. Here is higher than here. But if you look at this oscillator, it is going down from if you look at the top, the two top, this place is higher than this place. So let me remove it and show it again. So I'm looking at the two pivot, the two swing points. So here and here, this place is higher than this place. So it basically went up like this. But if you look at here and here, this place is lower than here. So it came down this way. We call this thing divergence. And when there's a divergence, so this is an indicator. Indicator is telling me that we're going to go down. Chart is saying it's going up. So this is an early indication that the chart is going to come down. So when it occurs here, what happened? It came down this way. So if you know about this, this is where you enter. But you don't just enter. What do? This is 15 minutes time frame. You go lower to the 5 minutes or the 3 minutes to see how we can enter this trade. So there are many places you can enter. You can enter here because this is a candlestick pattern. This is a continuation candlestick pattern. You can enter here. You can enter here. This is the last place you can enter to take this trade down. And where do we target when we are entering? We are targeting um, this particular Fibonacci level. Hope this makes a lot of sense to you. Now let me just give you this. If this is free tutorial now, let me give you a free tutorial in candlesticks. Sorry, in divergences. So divergence is basically when divergence refers to a situation where price of an asset is moving in one direction and the technical indicator is moving in the opposite direction. So if you look at this particular stuff, let me see if I can draw it. Let me make it full screen. I'm looking for, where is my drawing tool? Okay, I believe my screen can still be seen. So yeah, I have my drawing pencil now. So you can see this. You can see this. This is price. This is indicator. So price is moving down this way. You can see the line which represents it. Indicator is moving another way. That is when we have a divergence. And there are basically three types of divergence. So divergence is an early indication that price is, divergence signals a potential change in the direction of price movement. There are divergence can be bullish divergence. You can see price is coming down. Indicator signal that is going to go up, and what happened? It went up. Divergence can also be bearish. So price is going up. You can see price going up, right? And indicator signals that it's going to come down. Or what happened? Price came down from here. So we're looking for entry here to come down. Here we're looking for entry here to go up. There are three types of divergence. So I have the standard divergence, exaggerated divergence, and the hidden divergence. So it's for standard divergence, price is coming down like the regular one we see. For bullish one, indicator is going up. Now we call this lower low. Price is making a lower low. Indicator is making a higher high. This signals that price is going to go up. So look for entries around here and take profit around here. It can also be bearish. That is the standard divergence. So you can see in this case as well, price is moving up. So price is making higher high. This is a high. This is another high. While indicator is making a lower low. So this is, sorry, making a lower high. So this is a high. This is a lower high. And it signals that price will come down. What happened? Price is going to come down. So this example of a standard divergence. Then we have what we call the exaggerated divergence. In this case, price is making equal lows and the oscillator indicator is making making higher lows. So the signal is going to go up. So if you know how to trade double bottom, the indicator that tells you that this double bottom is going to hold is um, the signal that tells you that this double bottom is going to hold is the divergence signaled by the indicator. So this for the bearish scenario, price makes equal high, indicator makes lower high, and what happened? Price is going to come down. And the same thing we have with hidden divergence. What happened? Indicator makes a hidden divergence. So in hidden divergence is when you can see all this one for bullish For bullish divergence, indicator is giving upward movement. Indicator is giving upward movement here. So this is the only scenario where indicator is giving downward movement. This is a continuation, signals continuation. So price is making higher high. Indicator takes the opposite direction. It just indicates that this is going to keep going high. For bearish, is the same thing. So we're going to enter here and take profit. So indicator just tells us that. Now, there are what indicators do you use? Because someone is asking me, what indicator do you use for divergences? You can use the awesome oscillator. I don't use it. You can use the relative strength index. I use it sometimes. And you can use the MACD. You can use a stochastic oscillator, but I like to use the stochastic oscillator. Stochastic RSI, because that is what we are seeing here in my chart. So go back to the SUI chart. This is just a clear example of what happened. To take this trade, you just need a knowledge of these three things. One is that you need a knowledge of knowing, okay, because I know that this is my target. This is where we are going to. I know this is where we are coming to, but when do we come there? I can't say. And I just wait for the chart to tell me this is where we are going to go. And what happens, the chart tells us here that we're going to come down. And it did happen here. I didn't take this particular trade, but I drew it. It made sense to me, but I didn't actually take it. Because I know that when it hits here, you just want to test here and just go up. From experience, I know that if we have a sharp movement downwards that is taking out a fair value gap, there's always a sharp movement that takes it back up. And the market, see guys, I trade mainly from this period, right, till around, sometimes up to 3. But the thing is that we have more market movement, especially for cryptocurrencies in this period. We have more market movement, especially for crypto, within this period, because this is the New York section. The New York section is when the market really, really moves. So that is today's trade. I also took Forex trades. So let me show you guys the Forex trade I took. So this is JPY. So I took, again, I drew this. I was expecting price to come down to this point, right? But I said, let me make a quick trade here. When I drew this trend line and I took this trade, this is a losing trade. So yes, I make losing trade as well. The other trade I took, but again, the price still came down and came to my point, but I just left it. Another trade I took is this particular trade. So this is a winning trade. But what happened is that this is a 2 hour as well. It's a winning trade, but I exited this trade around here. I'll tell you the reason. The reason is because today is main financing rate. So this is some red news with regards to the euro. So this is the euro USD, right? And I knew that there would be volatility. So when I got here, I was like, okay, I don't know, because of the volatility around that, once is 115, yeah. So I know that price can just shoot up or shoot down. I don't know what the news is going to be. So I closed my trade, but the trade actually hit my take profit, and but I exited before my take profit. So this is basically the trade I took today, and it's been good. And I'm taking this, building my capital, and I'll keep on sharing this with you guys 2 times a week. Now, that said, let's talk about Trump. Should we do Q&A? Let me use 5 minutes for Q&A. Then we'll talk about Trump, and we'll end this. So I'll take let's do Q&A. If you have a question, just go to the comments and let me know in the comment section what your question is. Just go to the comment and let me know in the comment section what question do you have. Oh, we have people are X is full. So that's what my strategy is. I actually developed this my strategy by myself. It's simply I use trend line. I use three things. Should I for I have a lot of knowledge with regards to trading. I know about smart money concept. So if you see me drawing fair value gap, sometimes I use it. So here, right, where is it? So you see me looking at this. This is are called the PDRAs. I look at PDRAs, right? So I look at chart patterns, and I also look at candlestick patterns. So as a matter of fact, I don't need to even show you guys the papers. I like to look at some of the papers, keep on reminding myself. But yeah, I have it here. Let me share my screen again. So you see what I mean. So here, these are the PDRAs. It just shows you entry here. Entry is around here. Entry is here. These are for both short and long positions. These are chart patterns I look at for as well. Sometimes I just look at the chart for this, and these are the candlestick patterns that I look at for. This candlestick arrangement tells me that price is going to fall or rise, but I look at it at my trend lines. I don't just look at it anywhere. I look at it at my trend lines or where I expect price to come to. The other thing that I use is the high Kinashi candlestick pattern. So sometimes I may not see a signal from the candlestick pattern, but the high Kinashi will make it pretty clear to me that, okay, it's time for you to enter. And so this is the high Kinashi candlestick pattern, right? So for example, this, I am expecting price to come to this level, right? Now, to this particular level. And I have seen a divergence here. The divergence said, okay, there's a divergence, price is going to go down. So once the high Kinashi candlestick pattern shows me red, it is telling me it's time to enter this trade. So how do you enter the trade with the high Kinashi? You just draw this pattern. You just draw this here, enter this here. You'll take profit at the top of the high Kinashi. All you need to target is 2R. So if you bring this back to the candlestick pattern, this is it. So this is your entry. This is so high Kinashi also helps you to say, okay, this is the time you take trade. So high Kinashi, I use it as more like when it's time to enter. What are you telling me? Should I enter? Should I not enter? If the candlestick pattern is not making sense to me, then the high Kinashi does make sense to me. Another thing I use is, for example, I use this particular indicator not just for divergence, but as entry signal. Like when the look at the high can actually says enter here. So when this blue line enters back into 80, it's also an entry signal for you to go down. Now I could target to this point, it's going to give me a 3.5 hour or just do 2 hour. Do we have a PDF? No PDF yet, but I'm going to make a PDF, and you can actually you can go here. Where is it? You can go to, you can go and take my course on afibi.com. I detail out crazy steps. Like the steps I have here are crazy. You have a lot of steps. You have um, a lot of strategies you can use. You can just apply to get this going. So just go to afibi.com and get started. Pay for the course and learn from me. As a matter of fact, I am thinking of revamping revamping this and just doing like classes once a month but I won't be charging now, which it's gonna be this cheap. Anyways, so this is where we are. This is where we are. Let me check X. I think, let me see if Dixon is free. So let's talk about Trump. Let me just check that and see if I can send him an invite link. Hope you guys can still hear me. Okay, so do we have more questions? Do we have more questions? Do we have more questions? So no more questions. Let's talk about two more things. One is CBEX. So we had a Twitter space yesterday and we discussed CBEX. And okay, let's talk about two things, CBEX and Trump. The Trump coin. Trump coin is, a lot of coins are going to be dumped to those holding the Trump coin. So if you're holding the Trump coin, I think the unlock is happening tomorrow. It means that it is time for you to let go of your position. So I'm going to go to CoinMarketCap right now and show you guys something. Can I still be heard? Okay, so let me just go back to sharing my screen. So let's look at Trump coin. Official Trump coin, the 49 coin, and on CoinMarketCap, you can see that if you look at the chart, it's all red and pretty good volume, $1.53 billion market cap. And let's look at the charts. Right now, the fully diluted value is 7.67 billion. Yeah. And the thing is that we don't have a lot of this in circulation. About only 80% are in circulation, 20% are in circulation, I think. And the team is releasing more. More of the coins will be released. So this is an article on Binance by and the Binance Square by Crypto's Zobi. So the future Trump token is about to unlock 40 million tokens on April the 17th, but I think it's tomorrow, not the 17th. That is 4% of the total supply, and at the current price of $8 per token, we are talking about $320 million of token. If this happens, what will happen is that a lot of this is going to be dumped. I made a video sometime simply saying that the Trump coin, I think I made that video when the coin was still at the coin was still at $5 billion in market cap. Let me go back to market cap. It was still at 5 billion. No, that's some months ago. So I think it was around five. Yeah, this around here. I simply said that this coin is down only from here. It's going to be down only because, guys, more of these coins are going to be released to the market because imagine only 20% of the coin in circulation. More are going to be released, and when they are released, what is going to happen? They are going to be dumped. I won't encourage anybody to go, start buying a Trump coin again, or even trying to take a long position on it, because there's going to be a lot of manipulation. This coin again is going to be down only as more of the coins are being released. And after this first release, I think it's going to be a daily release from now. So Trump coin is a lot of dump are incoming. And don't be deceived. People might try to pump this coin. Holders might try to pump the coin. So you can see it's going up, and more people are going to buy. And what happened after they buy? Then the dump comes. And the crazy thing with the Trump coin is this. The crazy thing with this coin is that many of the people still holding this coin are Web2 people, because Trump made crypto popular, and many of his supporters, not all of them are Web3 people. They are going to buy into the coin, and maybe they are still believing this coin is going to go up without understanding there's what is called market cap, there's what is called circulating supply, there's total supply and all that. And because they don't know this, there will always be the exit liquidity in crypto. There is no ignorance is not an exception. If you're ignorant of it, it's going to be dumped on you. Now, I don't know if the comment section is still working. If it's still working, please do let me know, because I'm not seeing any comments. So use the comments. Use the comments. If you can still hear me, type 1 in the comments so I know you can hear me. Give me a 1 in the comments if you can still hear me. Okay, awesome. Awesome, great. Great. So, CBEX. So CBEX went with people's money. So we had this conversation long on X yesterday, how CBEX went with people's money. And I said something that CBEX is not the first. CBEX is not going to be the last. After CBEX, there will be another, and there'll be another, and there'll be another. And the thing is that people will keep on falling for this thing. Since the 60s, Ponzi scheme have been, in fact, what is 60s? Before the 60s, our fathers have experienced Ponzi scheme, and they keep taking new shape, and it will keep coming, and people will still keep falling for it. Because guys, if you want to make money, you really have to do the work. You have to do the work. You don't just say, I want to give somebody my money, the person is trading for me and makes the money. Many of them are Ponzi scheme. They simply take your money and pay you back that money small, and you say it's paying. You bring in more people. Maybe if you're among the first, they can even pay you all your money back and pay you a few more. Then when they see more people are not coming in, they close everything, they cash out, and more people lose their money. Now, some people think that, okay, the thing is that some people that lost money in CBEX have lost money in other ones before. Some persons know, they'll be like, okay, see, I'm in scam, this thing is not working. Then the person I introduce you will tell you, it's paid me the first month, pay me the second month. Let me do. And when you now do is when it will not crash. I remember when I started blogging back then, I was writing about cryptocurrency scam on Nigeria Bitcoin community. The site is still on. Let me go there. So this is basically how I started my crypto journey, not Twitter. It's basically by writing about crypto scam on this very website. Yeah, this is a Blum review, for example. So it's basically about writing about crypto scam on this website, and on this blog, And what happened? People read my blog that because YouTube wasn't that popular then. Yeah, there was YouTube wasn't that popular. Twitter was good, but it was just basically blogs that people gonna read. So writing about crypto and all that in this particular blog, and I have reviewed so many Ponzi scheme, like a lot of them, to know what really happens with with to know what really happens with crypto scam. I've reviewed a lot of them. And the thing, no, not just that is just Ponzi scheme. People are looking for easier ways to do Ponzi scheme. What they came up with now is exchange. Before, it used to be with regards to crypto, it used to be products. It now became trading. They'll trade for you. It now became Bitcoin mining. Now they know that people now understand this. People just want to go to an exchange. They now call it an exchange. CBEX is an exchange. These are all lies. And people keep falling for them. But if you're here, you're in crypto, you should know that these things are things you should not fall for. You have to do the work. It may take you time. See, I will say this. Trading, for example, might take you time. It might take you 1 month to learn if you learn from the right source. So go to Phoebe and learn from Phoebe. It might take you a lot more time if you learn from varying a lot of things and different sources, right? And but with practice, even if you learn from the right source and you don't practice, you will not get used to it. But with practice and consistency, a time will come where you will say, okay, I can actually trade, I can maintain some consistency over time. Trading will take you through that, but at the end of the day, you come out at top. But when you keep on running away from taking responsibility, when you just want to give this person, do this for me, do that for me, do that for me, you will never learn. You will just keep being exposed to different type of scams that are out there. So it's best for you to just take your time and learn a particular skill. Now, so I'm going beyond crypto now. Now, it might not just be trading, it might be other stuffs. It might be programming, it might be how to write sales copy, it might be editing, it might be administrative, might be just a lot of things that are out there. So, and the thing is that this is more like a coincidence. And the things that we're building a platform that will help you to do all these things to get the right skill you need. It is the mini app and it's coming really, really soon. So, guys, I want to thank everybody who attended this space. Um, this Telegram live. We have Twitter is we have a lot of people on Twitter, YouTube, Twitch, Rumble, Facebook. Thank you all. I hope you enjoy this class. We'll hold the next class coming Tuesday. I will show you the trade I took, maybe teach you another lesson in crypto and get to answer your questions. Does anybody have any other question? Type it in the comments. I will see it. If you don't, if there is no other question, then I will just end this live. Somebody's asking, can we continue to 6? No, we're ending now. Somebody say it's too early now. It's not too early. Tomorrow is Good Friday. Okay, see analysts, enjoy the class. Awesome. Thank you. More will come. We came late. This is recorded on, it's on X. It is on, okay, this is solo. It's on X. It is on YouTube. You can go to these places and watch it again. So that said, let's have, bye everyone.